Hello traders, how are you? Vladimir here from Home Trader Club, and in this video I want to talk about a very simple, pure price action based multi-time frame trading technique. And to explain my technique, I would like to share with you a real trading example as it was shared in one of the recent live sessions we've had in Home Trader Club. The example would be on Ripple or XRP against the dollar, but this technique is basically for anything. It could be for Forex, crypto, and yes, also stocks, indices, commodities, you name it. It is based on price reaction and it is based on a multi-time frame read how the price follows the same structure. So let's begin and let's see how it all works together. Before we continue, big thanks to 8K Broker for supporting me, this community and this channel. You can enjoy the special offers we have thanks to 8K Broker partnership, including the access to the club, the trading systems and private mentoring sessions with the link below this video in the description. So as I mentioned, the example I want to share and explain my technique based on is on Ripple, by Ripple, and this was the one of the trades we discussed in our recent live sessions in Home Trader Club. So before I dive deeper and start to explain all the nuances, I will now share with you the original plan as it was shared. You will now see a clip out of the original live session we've had. So watch that, see the full explanation behind it, and then I want to explain the technique. Okay, so here we go. And the final one for today, Ripple. Here is the interesting part I see on the chart. So Ripple, a lot of things could be said about this one. But after making the bearish waves and the bullish divergence on the histogram, we recreated here the bullish momentum. And now with this consolidation range breakout, it starts to look interesting for longer term buys. On a daily chart, classical trending structure coming in place as well. Okay, and again, the break here of the weekly ranging conditions, and now we are basically making higher highs on the daily chart as well, and that's why buy the dips is the straightforward plan. This was the first leg. Now it develops as it looks like the second leg. So any pullbacks here should open the doors for further continuation upside for the long term. If the view is correct, this low of demand should hold. Any pullback here should open the doors for further rallies, at least to the previous highs, but very likely to the significant levels around the one zone, or at least around it. So buy the dips for Ripple is something that is catching my eyes when it comes to cryptos in this period. So now after you watched the video and you understand the logic behind it, I want to explain this technique basically. But before that, I want to go to blank screen and I want to explain here the very basic logic of the price action that you need to know in order to be able to do so. So a multi-time frame usage of the price would be based on the same principle which I'll show now. Let's quickly go over the explanation of the trends. Uptrend is when we have a sequence of highs and lows pointing to the upside. Downtrend is exactly the opposite, when we have a sequence of lows and highs going to the downside. A trend flips when, or gives first sign, when instead of higher highs, higher lows, we basically break the structure and start to create lower lows first of all, and After that, if we manage to get lower highs, then we can assume we flip the trend or at least enter a corrective structure. Corrective structure could be either A, B, C, D, two waves, or any sort of a range. Okay? And trend change would look like if the sequence of the lower highs, lower lows will start to develop, then a corrective structure again, A, B, C, D, or a range, right? And then a breakout and continuation of the new trend. So with this logic in mind, we can start talking about any multi-time frame. Imagine this is one time frame, okay, where we got a trend changed, and then we got a pullback, and now we start to look for these sell opportunities because the trend structure changed and we now have lower lows and the most recent rising supportive line was broken, for example. Yeah. By the way, I would like to take this opportunity and to invite you to, if you want to learn the full concept of the price action read, of the waves and the cycles in a multi-time framework in Home Trader Club, that's what I do, that's my trading technique. So if you want to learn deeper all these things, keep in mind I'm an internationally certified financial technician, so everything that you learn, everything that you teach, everything that I teach and you will be taught in the club is basically certified. Okay, it's not any sort of creation or anything like that. I didn't come up with any crazy theories or anything like that, you know, some era ago. It's basically pure price work with indicators. So yeah, let's continue. So going back to the chart, the blank screen, the whole concept here is, as I presented before, if this is one of a higher time frame and it changes, right, now I can start look to sell. So I'll be doing absolutely the same on the lower time frame. I would be looking for verifications for that. So if now the yellow time frame, doesn't matter what time frame is, the yellow time frame flipped and hints potential sells, I'll be looking for confirmation for that on the lower time frame, which means I'll be looking for bearish structure, corrective structures, and then continuation. So this is all in terms the price structure. Now key levels could be found, and you will see how it all that connect. Right? On the trend, broken resistance becomes a support, as you know. Right? This is the first important thing that you need to know. And the demand area, where the buyers take control from, are basically the recent lows in an uptrend. So when we get the price retesting that and bouncing, we can basically look for trend continuation. Of course, if the price stands and lines up together for that. Okay, so how will all that look together? Once again, let's take a look on the yellow time frame. Let's imagine we flip down. What are the important basically levels here? Broken support becomes a resistance and previous high becomes the supply. Anything in between these two levels, ideally closer to the supply, because this is where the sellers took control. And we can start look on the lower time frame for the verifications, signs that the bears are in control, where we start to see sequence of lower highs, lower lows, correction, and then boom and continuation to the downside. Same logic exactly would be applied to the opposite direction. Right? We imagine this is the yellow time frame. We have the recent falling resistance line and it's broken. Right? And then we are changing the trend by making the higher highs. We can then start looking for buy opportunities. So if we will go to the lower time frame, we would want to make sure that the buyers, which create a sequence of highs and lows in the same direction, are basically there. And then with pullbacks back to where? Think about it. Broken resistance that act as support, and the demand area, which is the lows where the buyers took control from. Retest of this zone will provide us our buy opportunities. So this is a very brief explanation that I wanted to give you here. on how all this concept of the price movement works, and what I love to follow in simplicity. If you want to dig deep in all the waves and how they develop in cycles with a multi-time frame read, you are very welcome to join us in Home Trader Club and to learn all these trading techniques, and moreover to see how all that is implemented in real time. So let's take a look on Ripple. Again, you saw the video and the trend. Here is once again how the flow looks like. So this was basically, if you take a look here, high, low, high, low, high, low, a bearish trend structure. After that, at some point, it was broken. And after this breakout, what the Ripple started to do, sequence of highs and lows going to the upside with a corrective structure of ABCD or a range. So far so good, pure read on what the weekly chart provides us. At that moment, the weekly chart managed to break this range to the upside. So this breakout hints that the buyers might make the push. So what I want to see next in a very simple format, let me just go to the daily chart, let's go to the daily chart, right? And make sure the structure here changes. And the way we do that, take a look on the same last three. The daily did have a sequence of lower highs, lower lows, and then it broke the sequence by the trend line, the connection. If you connect the sequence of the lower highs, break above that is the first sign something happens. And this is the moment where it starts to gain this read by making higher highs, higher lows on the daily chart, which now connects to the weekly chart sequence. It's now fully lined up. And on the 4-hour chart, we basically had the absolutely same structure. This was the first leg to the upside with a correction here. Then we break upside and make new sequence of higher highs, higher lows. And now the 4-hour is synchronized fully with the daily chart, which is synchronized fully with the weekly chart. Now all we need to do is to mark the key levels. Broken resistance becomes the first zone of interest, and the demand becomes the next zone of interest, right? And this demand is also fitting right here with the previously broken resistance. So as the price drops to this zone, we now know that this is the area for us to go long, or basically go buy. And as long as this structure maintains, these are the daily waves as they develop, as long as the market managed to hold them and the daily important lows, and to maintain the waves on the 4-hour chart, because take a look, this is one wave pullback. It never broke the structure by making sequence of lower highs, lower lows right now. As long as it maintains that, we have the green light for a potential continuation upside. Straightforward. And to what targets, if this is our buy zone, to what targets we will be heading to, right? So for that we will go back to the higher time frames and we will pay attention to where the levels are. On the daily chart, this is the key high. On the weekly chart, we have the first high here and the next one is here. So the targets for us, if that would be our buy zone, this is the first target to pay attention to, as this is the next important level on a daily chart. Next potential target would be right here, and the final potential target would be right here. So when you get your buy opportunities, this is what you will be looking to trade. And such price actions read and a multi-time frame synchronization to the same direction, when everything is basically sort of lines up for you and is synchronized, should provide you, first of all, better odds. And remember, in trading business, it's all about the odds. It's all about the numbers. There is no such thing guaranteed wins or strategy that will always win. It's all about the odds. So you improve your probability to be right when you do proper analysis. Proper analysis is when you manage to analyze multi-time frame and make sure everything lines up for you, and there is a clear trend or clear synchronization on your read in terms of waves direction or any other of the techniques you are working with. In my case, it's the waves and the cycles. So this is the important thing, and then you are able to find your winning setups right from the key levels, key zones that you define: supply, demand, support, resistance. These are the zones, as simple as that. So that's the strategy: multi-time frame analysis, pure price read in the same direction, the trending structure that you want to see, and definition of the levels. Support becomes resistance, or resistance becomes support, and demand supply areas which create for you the zones of actions. And as long as the structure is there and the levels are holding, that's where the opportunities are. Will that guarantee you a profit? No, of course not. But it will increase your probability to be right. And thanks to that and the risk reward and the proper management, you will be making money. So that's basically it for this video. I hope you find value in this one. If you do, please don't forget to hit the like button and to help the channel with all the algorithm things. If you are new to our channel, please consider to subscribe with the subscribe button below this video in the description. Feel free to share this video with anyone who you believe can learn something new and benefit watching it, of course. And I want to invite you once again to our trading family, the Home Trader Club, where you will get your access to all of our complete comprehensive trading courses, real-time trading education, live sessions, real-time trading opportunities, community access, webinars and media zone, and so much more. Join us with the link below this video in the description. I hope to see you with us. Meanwhile, best to you and yours. Thanks for watching. I'll see you soon with more, and good trading. Bye for now.